Hey guys, Adam Rose, Vice President, Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. This is another episode of the Mortgage Guy podcast, and today I have a guest, Teresa Rose, the President and owner of Western Ohio Mortgage, and we are going to discuss FHA, kind of the history of FHA, and kind of some tools on how some of your conventional buyers might be able to use FHA to make their offer look even more attractive than it might be with a conventional offer. There's a lot of things that we're going to talk about today on FHA. So what is your take, and what do you want to discuss about this today, T?
So FHA is where I started my career 40 years ago. Mm-hmm. So I've been doing FHA loans since you had to literally type your forms up and send them into a field office and let somebody decide. It was before direct endorsement was even there. So it's always been there. It's been there since 1934, I believe. And it's there as we saw it shine through in 2008 because when financing and funding was not available, FHA was meeting its mission to help people get into housing. And I think we've maybe lost track of that a little bit because in this market, we need all the tools we can get.
Yeah, it's the redheaded stepchild right now, right?
It really is.
And it shouldn't be.
It really is. And it shouldn't be because the problem we have is we got so used to cash conventional, right? Everybody's got to go cash. Everybody has to have conventional or we can't take your offer, that we lost sight of the fact that there are ways to use FHA to make a very attractive offer and possibly get your offer accepted over a conventional one.
What? Did you hear that?
Happen.
Real estate agents, listen.
Yes. So people forget that you might have conventional buyers that are saying, hey, you know what? I can put 15% down. And what we might say to them is, hey, instead of putting down 15%, why don't you just do a 3.5% or 5% down FHA loan?
Right.
Let's take the other 10% and go over the ask. Now you've made a very attractive offer and you're understandably, your payment's going to be higher, right? Because you put less down.
You didn't put as much down.
Right. Mm-hmm. But what goes hand in hand with that is the FHA qualifying ratios are much broader. So in most cases, those borrowers are still going to qualify. And the most beautiful part of it is the loan is streamlined refinanceable, which we can talk about here in a bit about how that works. But you already are setting them up for the opportunity to easily refinance down the road when rates become more attractive. So it's a win-win, and it's a way to get your borrower's offer accepted in a very competitive market where you feel going over the ask is necessary.
And I mean, we don't talk about specific rates a lot on the show. We talk about generalities, but pricing on FHA, if you're a conventional buyer already, you probably have a pretty strong credit score. FHA pricing is pretty good.
Yeah.
It's attractive. Yeah. I mean, it's usually more competitively priced than what a conventional loan is offering nowadays. So that does help offset some of the loss in the down payment that you're doing. Now, something that you didn't mention on going over the ask is, well, it's all fine and dandy, right? Going over the ask, but what if we have an appraisal problem? So maybe we go 5% over the ask, but you use the other 5% that you're also still saving from that decrease in down payment on saying, hey, what about appraisal gap, right?
Right.
So if we're going $20,000 over the ask and you save yourself $40,000 by going FHA instead of 15% down conventional or something like that, for example, we can use the excess that you saved as a possible appraisal gap to make your offer more attractive.
Right.
And the reason it's a great tool is even in a conventional offer, you just don't know how much to offer, right? They just say there's a lot of activity on it, but you don't know if these guys are asking for closing costs. Are they asking for inspections? Are they at the ask? Are they going over the ask? You have no idea. So this is a great tool. So you already might be going over the ask of the conventional offer. This just makes it a little bit better in your pocket and getting your offer more attractive and get it accepted.
Right. And I think a lot of the agents that are maybe listening have kind of lost sight of it because they want, when they're working for their seller, they want the most attractive offer.
Sure.
And they automatically, I think, equate conventional with strength. That's not necessarily the case. Just because you have a conventional borrower, there's a lot of borrowers, 620 credit scores, they might still go conventional. They got cash.
Yeah.
That are not any stronger than an FHA borrower with a 750 credit score. I think a lot of people think that if you're going FHA, there's something wrong. And there isn't.
There's not.
Oftentimes, it is the most affordable option. Again, qualifying ratios are broader. Interest rates can often be more attractive, even when you build in the mortgage insurance. Yeah. A lot of people get hung up on the fact that the mortgage insurance is for life, as they say, where conventional mortgage insurance can drop off after a period of time. But statistically, we just don't know people staying in mortgages for life.
Yeah,
they just
right.
don't do it.
I think, especially first timers. First timers, I thought the average lifespan was like between 5 and 7 years, and then they're moving on to the next. They're refinancing, they're selling, they're upgrading, what have you. And FHA naturally is just a nice entry point in the market. I was just talking about this with a client just the other day that was going USDA, and we were talking about, well, what happens? What are the rules with refinancing? And I said, well, here's the great thing, because they asked about PMI being on the life of the loan because they thought it fell off on USDA, and it doesn't. Well, it's the same thing. USDA and FHA is a great entry point into the market, right? Especially if your credit score is not as good. And then as you build that back up and you're ready to get into a refinance position, we can look at the conventional option on the refi. And hopefully you have enough equity where it just drops off anyways. But there's a lot of great refi options with FHA, and that's what we want to talk about next is with these values kind of peaked, right? They're still growing a little bit, a little scary. But what happens if we get an adjustment on the value?
Right.
That is a concern that we all need to be paying attention to, because if we get a drop in the rates and inventory starts to move upward and level off with the amount of demand that we have, naturally, right, the valuations might slide a little bit.
Right.
Because that's the problem that we're in right now, right? Prices keep going up because the demand is so high and we only have a few houses on the market. Everybody's fighting over these few crumbs at the same time, which is keeping prices elevated. So let's talk about FHA and the streamline option.
Right. So what happened in the 2008 market, which I had a front row seat for, which we saw declining values and people lost. Literally, there were trillions of dollars of equity that was lost. It was unbelievable. We're not setting ourselves up for that type of market again. But a lot of concern that people have is, I want to put more than 3.5% down. I don't want to be in a situation where I can't refi because I don't have enough equity. The streamline option, there are several, and one of them is no appraisal. So if you're current on your mortgage and you're not rolling in any additional cost, you can refi or streamline that mortgage without an appraisal. So you don't have to worry about what happens if values drop. Many times you can qualify with just rating the mortgage history. So what happens?
Mortgage only.
What happens if your income drops?
Yeah.
Well, you can qualify for streamline without having to go through all that again, potentially, right? As again, there are several options, and that's one of them.
It's a little confusing. There's too many options.
There are so many, but you don't have those options on conventional. If you go conventional and you need to refi, you have to requalify 100% soup to nuts and have an appraisal.
Yeah.
Don't need to do that on FHA necessarily.
On a counter, depending on what the market looks like, the one positive on a conventional refi is it's possible that you get a property inspection waiver. I didn't want that to come up when you said have to get an appraisal.
Correct.
Assume you have to get an appraisal. But
Always.
depending on where you bought at, what your equity position was on the purchase, what the market conditions are, what the comps look like, it's possible that we get a waiver, right? That we personally, as a lender, do not control. No lender controls that, just for the record. All right. That is not up to us. That is not up to XYZ Mortgage or XY Bank. So that is an unknown out there, but possible.
And the other thing that happens when you do a streamline, you have an upfront mortgage insurance premium that's financed into the loan. Well, if you refi that in the first 3 years, some of that, there's a bit of a refund of that. So you're not paying that again. You don't get that with traditional MI, you just don't. So there are some advantages that people don't think of. And I think, again, the other obstacle that we often have with sellers, listing agents, maybe encouraging sellers to accept FHA offers, is they equate it with a lot of repairs.
Right, yeah.
Which truly, unless you have peeling paint, like a lot of peeling paint, the rest of the stuff is pretty much...
It's minor in nature.
Yeah, minor.
So refer back to last week's podcast when I talked about prepping being a seller and prepping your home for sale, right? Check that out. Walking through the home, just the normal stuff that you saw as a homeowner. It's like, that bugged me. It was kind of on the honey-do list, but you never really got it done. Do those things, all right? I mean, you're selling a house, for crying out loud. Have a little bit of pride in it, and feel good about the sale. I feel like there are some sellers out there that are like, boy, I hope they don't see that thing that I did or that DIY project that I try to cover up. I mean, we should, as a seller, feel a little guilty about selling a lemon. Right? I don't know what's going on, but that's something to consider, right?
And you shouldn't assume that because you're going conventional, that means no repair. Because whether you go FHA or conventional, safety and health of the occupants is what is key. So we've recently had some conventional appraisals where minor repairs were required because they affected the health or
You brought a cell phone in on my podcast.
Occupants. Sorry.
Jeez.
I thought I saw
You leave it at home half the time, and the time you
do.
come on the show, you bring it on.
Sorry.
It's all right. All right.
But anyway, whatever I was saying about the repairs. So it shouldn't be assumed that FHA equals I got to fix a whole bunch of stuff because you don't. Realtors out there, just look for, if you walk out in the back and the garage is detached and it is just shedding like a llama, then you need to paint it.
Llama.
Okay. Yeah. You got to scrape it and paint it. Right.
Right.
But other than that, you shouldn't have a concern about repair. FHA updated 20 years ago, updated the list of repairs, including cracked glass is not an automatic replacement. Handrails not automatic around, everybody thinks, oh yeah, this automatically has to be done. It doesn't. Sometimes
there's some appraiser discretion in there because
there is.
Some of the appraisers have been out there, have been in the business for so long, they forgot how some of the changes have come into play, especially the windows thing. Yeah. Right? The cracked glass.
Right.
I mean, we get caught up on that every now and again, and sometimes you don't get caught at all.
Right.
But yeah, that's not in the handbook anymore.
Right. It isn't. And the other thing to consider, we were talking about rate and affordability is unfortunately because of LLPAs on the in the conventional world.
Loan level pricing adjustments refer to May of 23.
Yeah.
Check out the podcast on that one.
Yeah. Because of those, borrowers who are putting down 20% and have high credit scores to boot
they ding you.
Are getting adversely affected. So in many cases, putting less down and using all that extra cash to incentivize, to make a better offer, get appraisal gap, maybe use it to pay off other debt that you might have instead of worrying about, I got to go conventional. And that's why we just really want the agents to be aware. Listen, don't discard your FHA offers and don't discourage the borrower from going FHA because it can be used as an effective tool to beat out a conventional offer.
It really can.
For sure.
It really can. Just make sure the offer's written up correctly. And again, that appraisal gap is a great tool to make it more attractive, right? Because, if you go over the ask that much, and that's the question that comes up, is like, well, that's great, but there's nothing in here about appraisal gap. So what if our appraisal falls short? That's why we listed it at a certain price. And putting that appraisal gap in there can get it accepted. Right. So that's a great way to decrease your out-of-pocket expense or decrease your down payment and just reallocate the monies that you have saved up for this transaction.
And borrowers, for those of you who are borrowers out there listening to this, just remember that FHA is also one of the few products that lenders still manually underwrite, meaning that a computer doesn't have to spit out the answer.
But not everybody does.
Not everybody, that's right. But we're great at it. Yeah, we're very good at it because I cut my teeth on manual underwriting.
Right.
There was no AUS when I started in the business. So we know how to manually underwrite. So if you're a borrower who has had difficulty getting financing, been told you can't be financed, being told, it's a manual, can't do it, definitely need to give us a call and let us take a look because you would be surprised at how many no's we've turned into yeses.
Yep, that's right. And that's, we got anything else on FHA you want to touch on, T?
Not that I can think of. I think that kind of covers it. I just really wanted to emphasize to agents out there, please don't poo-poo your FHA offers.
Please don't.
Give them some consideration because there's a reason for it.
Yep, absolutely. And I feel like in our market here in Shelby County, this is where our office is located. That's why I said our market. Everywhere is our market, for the record. Anyways, I don't think we have too many issues getting those accepted. Some larger cities, is a little bit more of a challenge, but so that message is really directed to you guys in the Dayton, the Cincinnatis, the Clevelands, the Columbus. Don't turn them away, all right? Because it doesn't mean they're a bad buyer. Just remember that. And if you're selling a house for really, really expensive, for $350,000, there shouldn't be any damn repairs anyways.
That's right.
Good Lord.
That is right.
Right? Okay. Very good, guys. Well, thanks for checking us out this week. Remember, subscribe on YouTube. Check us out on Spotify and Apple Podcasts, and we will catch you all next week.